Why can't you economists answer questions? Should any American have to pay tax on unrealized gain? Why can't you just answer me?
Yes, there are some who should.
Who?
The ultra-wealthy who have liquidity should prepay some tax
What
on
if they
that.
don't have liquidity?
They should not have to pay, and they will owe at sale, bequest, or gift
So if you have cash, you ought to have to pay, but if you don't have to pay?
to prepay.
Did you catch that, folks? John Kennedy asks one simple yes or no question about taxing unrealized gains, and suddenly the economist can't give a straight answer. Tell me if I am wrong, but when someone can't answer a basic question, it usually means the answer is uncomfortable. Watch how Kennedy presses harder, loses patience, and exposes just how divided this tax debate really is.
Dr. Yagan, am I saying your name right? Tell me, if you were king for a day and you could rewrite America's tax code, tell me the 3 changes you would make.
Number 1, I would equalize labor and capital tax burdens at the top. There are a couple ways of doing that. The billionaire minimum income tax is one that would move in that direction. I won't rehash those details. Senator Johnson actually talked about a corporate tax integration type.
What's number 2?
Sure. Number 2, part of closing the labor and capital disparity is closing the Gingrich-Edwards loophole. And number 3 is ending abuse of trusts. So the estate tax has been eviscerated. Many of those, you take assets that you know are worth a lot. Right now they're purportedly worth a little because you haven't taken your company public. You put them into a trust, it explodes.
Do you support a wealth tax? Do you know what I mean by wealth tax?
I do know what you mean by wealth tax. The billionaire minimum income tax taxes income, and that I think is the way forward in that space.
Well, let me be a little more precise. Do you think appreciation of assets that are not sold, unrealized gain, should be taxed?
I think you should have to prepay tax on it that will eventually be due at sale, gift, or bequest.
What do you mean prepay the tax?
Sure. So if I have $5 billion of unrealized capital gains, I have $5 billion of taxable income, and I'm currently paying $1.5 billion on that. So that's a 15% overall tax rate.
Well, let's don't complicate this. I want to understand
Sure.
what you're saying. Let's suppose an American owns a piece of real estate they inherited from their father or their mother. And it was, when they inherited it, they got to step up in basis. It's worth $100,000. And all of a sudden, the interstate came through. And the property is now worth $1 million if they sell it. But they don't plan to sell it. They're going to leave it to the kids. Do you think that Americans should have to pay tax on the unrealized gain, the increase in value?
In general, no. At that level of wealth, for example, housing.
You think only wealthy people should?
At the very top, it's hard to tax,
But let me be sure I understand what you're saying. All right, let's suppose that's not just an average American. Let's suppose that's an American. What do you define as rich?
In the minimum income tax, it's $100 million of wealth or more.
Okay, so you think if you're really wealthy, you should have to pay a tax on your unrealized gain?
I think you should have to partially prepay if you're liquid, if you have liquidity to pay.
Should any American have to pay tax on unrealized gain? Why can't you just answer me?
Yes, there are some who should.
Who?
The ultra-wealthy who have liquidity should prepay some tax.
What if they don't have liquidity?
They should not have to pay, and they will owe at sale, bequest, or gift.
So if you have cash, you ought to have to pay, but if you don't have to pay?
To prepay. I have in my testimony, there are examples of how this works so that You can preserve incentives to build a new company, take it public.
Okay,
While
what do you
also-
think, Dr. McBride? Do you think we should start taxing unrealized gains? And what do you think that'll do to the economy?
Well, I have several concerns about the approach. The first of which is it's completely untested. It's never been tried in this country. We have more than 100 years of history with the income tax, and
Europe's tried it, haven't they?
no, they've tried wealth taxes.
Yeah.
Their experience
How'd that
with
turn
wealth
out?
taxes has
How did
been
that turn out?
bad. It
Why is
resulted
that?
in a lot of taxpayers exiting the country, for one thing. In France, for instance, other countries that have tried it. And you suddenly lose a big chunk of your tax base that you're trying to tax there. We have that option in this country as well. The result has been that most of those countries in Europe that have tried a wealth tax have rolled them back,
Yeah.
including France, because they were administratively challenging. The basic challenge is what you're describing, trying to value assets without real market transactions. So this is a valuation dispute. It means we get the IRS engaged in yet another challenge. They're currently doing this with the estate tax. Those estates that are subject to the estate tax, those valuation episodes can go years and years and years.
Can I have 30 more seconds?
Proceed.
Dr. Is it Clausing? Clausing?
Yes.
Yeah. Why do you and Dr. Yagan, why do y'all want to punish wealthy people?
I think I can speak for both of us that we're not interested in punishing anyone. We're interested
Well,
in
you're
having
interested
a
in taxing
fiscal
the hell out of them
system.
more than anybody else.
I think
The
what
what makes you think that making tax policy on the basis of class or status makes sense?
I think it's a very American phenomena that throughout the history of the income tax, we have valued progressivity, and our current income tax does that. We used to rely on things like tariffs to raise revenue. Tariffs are regressive consumption taxes that disproportionately hurt the poor. We believe in this country that those with the greater ability to pay should pay more of the burden. And that's part of what a healthy capitalism does. It enables people to gain from things like trade and technological change and business innovation, and to contribute a little more to the fiscal system when they're very successful in doing so. And I think that that's a very legitimate way to structure the tax system.
Can
And
I ask you a question?
Yes.
Why do you think so many wealthy people are leaving New York City?
New York City is, an incredible city of innovation, immigration, entrepreneurship.
Yeah, but why are so many wealthy people leaving?
I think there are big advantages to living near centers of entrepreneurial activity, and we see that on the West
You think they're
Coast.
leaving to be nearer to centers of entrepreneurial activity, do you?
Well, I don't think there are a lot of people, fleeing New York City. That New York City has.
Sure they are. There are thousands. I mean, there have been study after study after study. Why are so many wealthy people leaving New York City?
I think there's an enormous number of wealthy people who are in New York City and continue.
But why
to
are
be
so
very-
many leaving?
I can't speak to why particular people.
I can
leave.
tell you
I
why.
know
It's
that-
taxes.
I need to know if I'm the only one who found this exchange unbelievable. John Kennedy walks into this hearing and asks what should be one of the simplest questions in public policy. Should Americans be taxed on unrealized gains? Yes or no? And from the very first answer, you can tell this is not going to be simple, because instead of clarity, we get layers of conditions, definitions, and academic explanations. Kennedy asks the witness what he would change in the tax code if he were king for a day. We hear about equalizing labor and capital taxes, closing loopholes, and fixing trusts. Fine. But then Kennedy zooms in on the real issue, taxing wealth that exists only on paper. Not money you earned, not money you sold something for, just value that went up over time. He gives a very real-world example. A family inherits land. It's worth $100,000. Later, because of development, it's suddenly worth $1 million. They don't sell it. They want to pass it down to their children. Kennedy asks, should they be taxed on that increase, even if they never sell? And once again, the straight answer never comes. Instead, we hear that only the ultra-wealthy should face this, only above a certain threshold, and only if they have liquidity. At that point, Kennedy says what a lot of Americans are probably shouting at their screens. Why can't you just answer the question? Because when a policy can't be explained clearly, it usually means it won't be applied fairly. Then another expert steps in and warns that taxing unrealized gains has never been tried in the United States. He points to Europe, where wealth taxes were tested, failed, and were rolled back. He talks about people leaving, tax bases shrinking, and the nightmare of valuing assets that were never sold. Kennedy takes it even further. He challenges the idea that government can spend money better than the people who earned it. He talks about how people vote with their feet, leaving high-tax states for low-tax ones. And whether you agree with him or not, that argument hits close to home for a lot of Americans watching this. By the end, it's clear this wasn't just a tax debate. It was a clash between two worldviews. One that believes more government control creates fairness, and another that believes individuals know best how to use their own money. And that's a conversation America is nowhere near done having. If this exchange made you think, make sure you subscribe for more moments like this. Share this video with someone who needs to see it, and let me know your take in the comments.